Hey, what's up, everybody? Welcome back. Xavier here, coming back with another video. Sorry about the long wait in between. It's been very busy. I've been busy doing a lot of work, both at the job as I do work as a nurse. Been a nurse for about going on 8 years now. So it's been a little bit busy between that, and then I do run a small private home care here in New York, in the city, that I've been kind of plugging away at for the past 2 years. So I haven't had time to actually sit down. Plus, I do some other things. I have another YouTube channel for gaming, as I am a gamer. I've been a gamer for a long time, but I have been investing since my early 20s. I had learned to day trade way back when I was 21. I'm 40 now, so I learned to day trade in a proprietary firm. And so I think I had spoken of in my last video that for 2020 I had set a goal for creating a portfolio. I do enjoy using M1. As you can see, I am up to date. I wanted to make sure that I was, had the funds to put in for, as I had said, I wanted to make sure that I was, allocating at least, 1K a month. And I started this back in November of on the 27th of 2019. And then I kind of been adding quite to, and I do have a little bit of money in cash, and that's primarily because I typically pay attention to things that are pulling back. And one thing that I did want to touch on was I was watching another YouTuber who was talking about, for long-term investing, how technical analysis is like a fool's way of investing, and everything is about fundamentals and etc. And I had just wanted to touch on that very briefly. So I think most people are very familiar with, stocks like AT&T, for example, and just looking at, so you might like the fundamentals on AT&T. You might think it's a great stock. You might think they have a great network. They're doing, great things. They're moving forward, etc. But just taking a look at the AT&T chart, as you can see, the stock is trading at 38.20. But if you look at the chart, even as far back as what is this, November of 2007, even December, you can see that for the most part, AT&T has struggled to sit above $40 a share. So if you were looking at this stock, would you be an investor? Would you want to go, in essence, all in? If you were thinking, well, AT&T fundamentally, it's looking really good. I mean, even looking at the chart right here on the yearly chart, you can see it's rather very obvious that the stock seems to stall at the $40 mark, and you can see multiple times just from 2016 all the way up until 2020. As you can see, the stock is again pulling back just shy of that $40 mark. So it seems like while the street believes that the stock, of course, is very valuable, AT&T is doing great things. It has a very nice dividend. For those who are familiar, AT&T pays a very good dividend. You can see right here. But obviously the street thinks that AT&T is just not worth it at that $40 mark. Now, of course, if you were to ignore just looking at the chart, you would think, well, it really wouldn't matter when you buy. But literally speaking, just looking at this chart, you can see that AT&T looks like it's more than likely kind of topping out at about that $40 mark. It would need some really good news to make investors feel that AT&T is worth more than $40 a share. And so, of course, if you never looked at the chart, if you never looked at it, one of the most important things I would say when deciding, even as a long-term investor, is to decide, you might like the stock fundamentally. You might like the company. You might think it's going to be moving forward and it's going to be increasing with their earnings, quarter over quarter, etc. AT&T, as you can see here, had been showing less than what the street had been thinking. Same thing with like other similar stocks like Tesla, Pfizer. A lot of these stocks hit certain areas and then the market pulls back. To imagine that looking at these stocks from a technical standpoint, as you can see right here, where Pfizer, excuse me, for quite some time had a hard time breaking above that $36 mark. And then, of course, we see a nice breakout. You can see a lot of channeling right here. And then finally, the stock breaks out on volume, subsequently retests the area where it previously was its resistance, and you can see the stock again bounce. And of course, this right here, this pullback here, is in relation to what was going on with coronavirus. You can see that with a lot of different companies. For example, things like CCL. Looking back at the chart, you can see where the stock is kind of retracing to areas that were resistance areas. And then they bounced off of those resistance areas, making them support. And then you can look back at the chart to kind of give you an idea of, excuse me, of when you might want to enter into a certain position. Because you might like the stock. You might think, for example, avocados, are really good. There's a good source of a healthy fat. At the local supermarket, sometimes they're 2 for $5. At 2 for $5, avocados are great, but not at 2 for $5. Sometimes they'll go on, they'll go on sale, and maybe you'll catch them, 3 or 4 for $5, and then avocado's worth it. It doesn't diminish the value of what avocado does for you, but in terms of its price value, it's not worth it. And it's the same thing when you're looking at a stock chart. You might like a company, but maybe the price tag that's currently available for the market isn't according to your liking. You might like Carnival Cruise. You might have been on some other Carnival Cruise. You think they're fantastic. At $67, at $70 a share, not so great. At $42 a share, you might be starting to like Carnival Cruise into your portfolio. And it's really important. It's not just about fundamentals. Just like in medicine, Eastern medicine and Western medicine both have their benefits. To say that only Western medicine is of benefit, Eastern medicine is foolishness, or Eastern medicine is the only thing that's worth doing, and Western medicine is foolish, vice versa. Of course, that would not be the case. We know that they're both of benefit to the body. And it's the same thing when it comes to fundamentals. It's important to understand the fundamentals of a company, and that the company is moving forward, that they're making good and wise business decisions. But it's also important to understand that sometimes the street will push a stock, and of course it will become overvalued, and then subsequently the market will pull back. As you can see right here, this is a very good example of, again, where you see Carnival Cruise coming to what looks like about $68, and then you see the market kind of collapses, and then we see a subsequent retrace, and the immediate reaction of the market is to sell the stock down. And so this is very important when you see this, especially when you're looking either to swing or long-term trade. It's very important to pay attention to where the stock is currently and look back and see where there are areas where other investors, right? Because this is very important to understand that all these little price actions here that are happening are people buying and selling. There are other investors just like you. And so other investors may be inclined to sell a stock down. They may incline to sell a stock short. Just like when a stock comes to an area that was previously looked at. For example, another one, good one, I think it was it APA that I was looking at? I forget. There was another stock that I was looking at where the stock kind of had bounced multi-year, literally bouncing off the same price point. And so it's always important to look back to see where, even as far back as you can see right here, even the stock breaking above 55. So it's always important to look back to see where other investors who made the habit of making purchases at certain price points, just like investors will make the habit of selling at a certain price point, because they realize that other people are going to end up doing that. With that said, going back into my portfolio, as you can see, I did increase the amount, and I had made some subsequent changes. I do have a little bit of money in cash, as I'm not looking to put everything in, primarily because especially during what was going on in the news with the coronavirus, there were certain stocks that had much harsher pullbacks than others, and one of those, of course, was 3M. I saw the stock had pulled a little far back. Looking back at the chart, I do like the company, and of course we are seeing a little bit of channeling going on here. And so I decided to add a little bit of money, and so I paid attention to what stocks had a little bit of a harsher pullback than others. For example, like Enbridge really didn't have much of a pullback, and if anything, it subsequently rallied. So looking back at my portfolio, looking at the dividends, one thing I did want to mention was I did change my allocation. So previously I had my risk at 15% and my bonds were at 20%. I subsequently did make some changes. I did end up adding the BNDX for the Vanguard Total. It's the international the international bond ETF, and so I did put a little bit of money into that. I am a little underweight in this one, and I'm a little overweight in the total bond market. So that's something that will change over time as it slowly allocates to funds. I'm basically putting in anything just above about $500. But looking at, and I did make some changes into my risk that you can see here. As I said, I did put in some funds into Triple M. In terms of looking at, so you can see my risk portion of my portfolio is kind of a little bit out of whack. Certain things are underweight, certain things are overweight, and that was just primarily because there were certain stocks that were harder hit by the news regarding coronavirus, and so I paid attention, looked back at the chart, checked out the stock to see if it was a very solid company, and then of course subsequently made purchases as I found them attractive. And of course, looking, you can see here in terms of my risk portfolio, the CI between Square is probably the big one. Is the biggest ones are of course the 1, 2, 3 tech, and then of course GEO, which is a REIT. I had spoken about GEO a while back, that the company had been hit primarily because a lot of banks were talking about not wanting to invest in REITs. Another company like GEO is CXW, and they invest in jails and like detention centers for people who are coming into the country illegally. And so I had previously purchased it in my trading account, and I swung the stock for a good profit. I did like the company when it pulled back a little bit over here, so I decided to make a purchase into my M1, and of course it's been working out fairly well. Wish at the time I had put in more, of course, into it. As you can see, I'm up almost 31%. Same thing with Microsoft, AMD, as you can see here. So just a little update. And of course, I did, like I said before, I did like the retailers in ANF as well as AEO and GPS were some of the retailers that I thought were hit a little bit too hard, and I think that they'll subsequently make some advances into the market. And of course, Triple M, I'll have to wait and see if that one actually works out. And of course, looking back at my the dividend portion of my portfolio, going here, you'll see I am weighted a little bit into oil, between E&B as well as BP and APA. So you can, I'm a little bit down in EPD and EPD, BP. So it's kind of like my oil play, and I know oils are taking a little bit of a hit, especially because everything is about, you know, saving the planet, etc. The generation is a little bit different from what people are saying, and that money managers are moving their money out of oil stocks. Even though if you look at, for example, if you look at BP, I think BP has actually been doing fairly well in their earnings. No, excuse me. Looking at EPD, a lot of the oil stocks had actually done fairly well, had solid earnings. But in any event, what we're seeing of course, harder pullbacks into energy as more people are more looking for like clean energy, etc. So that was kind of my play about why I was interested in oil. I think a lot of these stocks will come back. Same thing with Carnival Cruise. I think Carnival Cruise was a little overly hit, especially what was going on in with the coronavirus. They moved back about 20%. The stock was trading at $52 and moved back subsequently to about $42. So it literally lost about 20% of its value literally over that 1 week or so. So that was kind of why I went into Carnival Cruise, looking for the long term. And of course, it does pay a dividend. Pfizer is another stock that, of course, I do enjoy. And then I added things like Coca-Cola and Kellogg's. I was kind of pairing stocks up, like food stocks, like FLO, with Kellogg's, LTC. In terms of like my banking stocks, I had LTC and Ladder, and then of course stocks like ORI, which I held personally in a separate account for about 1.5 years, and I did really well. So it's kind of you can see my plays here. I'm talking a little bit about, of course, I will be allocating funds continuing for the coming months. What I did want to discuss was a lot of times you might see stocks, and stocks might be at certain areas where, yes, they are attractive, but the price point for you is not an area where you'll find where you're wanting to add to your portfolio. One thing that I did want to talk about is that I do pay attention, of course, to pullbacks, which is why I'm just kind of like not just automatically, it's like today's Thursday and the deposit goes in and just automatically spreads the money out that way. There's multiple ways that, of course, that you can practice adding to your portfolio. One of the ways that I've been choosing, of course, is to auto invest only over a certain amount, and I've been putting a lot of individual buys into areas where I think stocks are being devalued or they've come too far down, and as a result, I've made allocations that way. That's one way. If you really don't understand like chart review and just looking at just being able to pick highs and lows, and of course, one of the most important things when it comes to investing is patience. But with that said, I'm just trying to keep this video short. I will update. We'll see how the market comes over the next couple of weeks. I'll probably put out another one of these videos. I guess I'll shoot towards the end of the month so we can do a little bit of an update. As I am a little bit busy right now, I hope you guys are having a great week. And thanks for watching. And of course, I will continue to update you on my N1 portfolio. Thanks for watching. Take care and God bless.